In this video, I will test this buy and sell indicator that apparently will make you rich. The strategy was published by the YouTube channel named Cryptonium, and the creator says that it works perfectly well on a Bitcoin 5 and 1 minute timeframes. He actually mentioned that the strategy gets over 80% of win rate, which is pretty unrealistic. So let's find out the true win rate for the strategy by backtesting it 100 times with an initial account size set at $100 with 1 to 1.5 risk reward ratio. As always, I will try to improve the strategy in the second part of this video, so stay tuned for that. For all the people wondering what backtesting service I'm using, it's called TraderEdge and it's officially the best backtester out there. Thousands of new and professional traders using TraderEdge to get an edge on air competition. You can save so much time by testing strategies with TraderEdge. All you need to do is to set up your initial account size and the profit and loss per trade. You will get all the information you need about the strategy, such as the win ratio, the profit and loss, the maximum drawdown, the profit factor, and more. You will also find some other super useful features in our website, such as the position size calculator, which can be really handy for those who trade Forex and commodities, the profit and loss calendar where you can track your trading performance and make some important notes, and the indicators and strategies menu. Here you can find and download some super accurate indicators for MT4 and TradingView platforms, and they've all been proven to work. If you're not entirely sure how to backtest, no worries, you will get a full step-by-step backtesting plan which has $100 value. If you're not sure how to build a profitable trading strategy, no problem. You will also get a full course on how to build a profitable mechanical trading strategy which has $270 value. So that's around $500 worth of bonuses, all for free, but only if you sign up right now. TraderEdge has a 7-day free trial, so there is absolutely no risk at all. So go ahead and check it out. I will leave a link in the description below. Alright, so we are in a BTC USD on a 5-minute time frame, and now let's go ahead and build our strategy. So in order to find the first indicator, we need to type in black flag. And let's select the swing arm ATR trend indicator by VSN FND. Okay, now we need to access the settings on this indicator, and in the input section, let's change the ATR factor from 5 to 6. And in the star section, let's remove everything except for the plot's background. So this indicator will serve us as a filter. So generally, if the plots are green color, this is an indication of an uptrend. This also means that we're only going to be looking to buy during this time. And if the plots are colored in red, this is a signal that we are in a downtrend. So we're only going to be looking to sell during this time. Okay, now let's add the second indicator to the chart. And this TradingView tool is called Signal Table. Signal Table indicator by only Fibonacci. We also need to adjust its settings. So in the star section, let's remove the tables. And based on this indicator, we're going to be placing buy and sell orders. Every time the green line crosses the red line upwards, this is a signal to buy. And when the green line crosses the red line downwards, this is a signal to sell. Alright, now let's understand the exact rules for this strategy. So for a long trade, we only need to have 2 conditions met. First, the black flag indicator must be green color. Second, we need to have a new bullish signal issued by the signal table indicator. The stop loss for this strategy will be set at the recent swing low. The profit target will be set at 1.5 times the risk. As we can see, the strategy is super simple to use. By the way, this is a basic version of this strategy. The creator also mentioned that there is an advanced version that can apparently achieve a 100% win rate. That particular strategy does not have a fixed risk-reward ratio. You're basically using these moving averages as an exit indicator. So for an exit signal to be valid, the price action must close below these 2 moving averages. Sometimes this approach can be really effective, especially when the market is trending. It's mainly because you're giving yourself a really good chance to catch a massive chunk of the ongoing trend. However, when the market is ranging, this strategy does not play out that well. As we can see, the risk-reward ratio sometimes can be negative. For that strategy, you also need to be using support and resistance lines and trend lines. If you want to get more details about the strategy, check out the original video. Today though, I'm only going to be testing the simple version of the strategy. Okay, now let's understand the short positions. So a short signal is valid when we have 2 conditions met. First, the cloud must be red color. Second, we need to have a bearish cross on our moving averages. The stop loss will be set at the recent swing high, the profit target at 1.5 times the risk. So just by looking at the chart, we can see that the strategy issues pretty accurate signals. But as we all know, the strategy must be tested at least 100 times to know exactly if it makes money or not. So let's actually start our backtesting and see how well the strategy performs in different market conditions. Alright, so the backtesting is finished, and as we can see, the results are quite average. The win rate for the strategy is not anywhere near 80%, it's only 49%, and after 100 trades we gained over 50% of profit on our account, which is not that bad actually. The strategy is making money. However, if we take a look at the profit factor, we see that it's only 1.44, and we had 5 consecutive wins against 6 consecutive losses. And the maximum drawdown is 11.42%, which is not that bad as long as you stay consistent with your risk per trade. So yeah, overall I would give the strategy a score of 5 out of 10. It's definitely worth looking at. You can even test it on different time frames to see how well it performs there. Okay, now let's actually try to make this strategy better. So after hours of testing, I finally came up with a really interesting setup. So what I basically did was, first of all, I got rid of the moving averages, mainly because that indicator issues a lot of false signals. Instead of it, we're going to be using the UT bot alerts. By the way, I changed the settings. I also changed the settings on a black flag FTS indicator. And to triple confirm the entry, I added this historical volatility percentile indicator. Okay, without wasting any time, let's jump straight into the trading rules. So a long entry is confirmed only when we have these conditions met. First, the UT bot alert has to issue a new buy signal. Second, the price action needs to close above the cloud and the cloud needs to be green color. Third, the volatility bar needs to break above the moving average and it needs to be colored in either orange or yellow. This means that we're taking trades only when there is a medium or high level of volatility in the market. When the volatility level is low or ultra high, we do not take the trade. Once we have these conditions met, we can safely enter a long position at the close of our trigger candlestick. Our stop loss will be set at the recent swing low. And we're going to be targeting 1.5 times the risk. Right away we can tell that the strategy is much safer because we simply got more requirements to be met. And this leads to taking only high quality trades. But I must admit the strategy does not issue a lot of signals, so you kind of have to be patient and really wait for a good opportunity. By the way, if the volatility indicator hasn't caught up by the time the UT bot alert issues a buy signal, you can wait another candlestick for it to catch up. In this case we see all the indicators are lined up properly. Okay, now let's understand the sell position. So first, the UT bot alert has to issue a new sell signal. The price action needs to close below the cloud and the cloud has to be red color. And finally, the bar on a volatility percentile indicator has to break above the moving average and it needs to be colored in either yellow or orange. A sell order will be placed at the close of the trigger candlestick. The stop loss will be set at the recent swing high and we're going to be targeting 1.5 times the risk. And again, if the price action is closed inside the cloud, we do not take the trade. Alright, let me give you one more example. Here we see the indicator issued a new sell signal. The price action is below the cloud and the cloud is red color. However, the volatility percentile indicator hasn't caught up yet. So we waited another candlestick and as we can see, the conditions are met. Ideally, you do not want to be entering a trade at the worst price, but on a 5-minute chart, this price difference is not significant. Okay traders, I hope you have understood the rules for this strategy. Now let's do another backtesting and see if the results are any better. Okay, the backtesting is finished and as we can see the results are much better. The win rate is 68% and we gained over 290% of profit on our account. If we take a look at the profit factor, we see that it's above 3, which is good for scalping. And we had 10 consecutive wins against 3 consecutive losses. So yeah, definitely good results for a 5-minute scalping strategy. You can definitely give it a try on a 1-minute time frame as well, but make sure you do your proper backtesting and forward testing before trading live. Okay traders, thanks for watching this video, I hope you found it useful. If you want to see more videos like this in the future, please subscribe to TradeIQ. By the way, check out this video right here, this is literally one of my best strategies on the channel I have found so far.